Hello, and thank you for viewing this webinar presented by theforeclosurepro.net. My name is David Silverman, Certified Distressed Property Expert and Short Sales and Foreclosure Resource with RE/MAX Country out of New Brunswick, New Jersey. This webinar is released for the fourth quarter of 2009 and is entitled Short Sales Gets a Facelift. During this webinar, I will be discussing the new program laid out by the U.S. Treasury Department called HAFA, which is designed to mitigate the housing crisis by streamlining short sales and deeds in lieu. We are at a transitional time right now between the old processes for short sales and the new ones just laid out, so you should view this presentation as a vision of what was versus what will be. And what it was a mess. The older processes were very difficult to navigate, and few sales were actually closed relative to the supply. The bankers seemed to be working against everyone and holding back the processes, taking up to a year or more to approve a purchase and doing little to help the seller sell his property. This process substantially pushed away buyers from short sale listings, as most buyers have to sell their home before buying a new one, and they need a more finite time frame in which to do so. Even worse was the stigma attached to selling short. Many homeowners were unaware of how bad and how large the problem is, and few understood that in most cases it wasn't their fault. As a result of misplaced shame and guilt, homeowners stayed silent and delayed doing anything, hoping it would all just go away. The bad news is it did just go away when the bank foreclosed on their homes. And before I get into how much of this is changing, and believe me, a lot of it is changing, I want to talk briefly about why things are changing. And this news is bad. The chart in front of you shows the amount of money invested in adjustable rate mortgages and when these are scheduled to reset. As you probably know, adjustable rate mortgages come in many shapes and sizes, but the main premise of an ARM is that you pay a small monthly payment until the loan resets, which is usually in 3 to 7 years, after which time you can see a large payment increase. Most borrowers attempt to make the larger payments for as long as they can, but after a while, they simply run out of money. The large gray area on the left is a visualization of the subprime mortgage crisis. In 2007 and 2008, billions of dollars worth of subprime loans reset, causing millions of borrowers to pay substantially larger monthly payment. The result is a large number of distressed property owners in 2009 and 2010 who tried to get by on their new payments, but due to the economy or job loss or other reason, could not do so. And here's the bad news. Another wave of resets is coming. In 2010 and 2011, more ARMs will reset, specifically option ARMs, shown here in green. It doesn't matter what the difference is between ARMs at this point, and I won't get into it in this presentation, but just suffice it to say that these effects are cumulative, and that this second wave of resets will build on the existing crisis for the next few years. This is why things changed. The banks see the upcoming wave as an oncoming tsunami of foreclosures, and they want no part of it. Banks are not in the business of owning property. They're in the business of lending money. Foreclosures cost the banking industry billions of dollars, and the big point here is that to banks, short sales are a relative bargain. As a reaction to these factors, the U.S. Treasury Department announced recently the Home Affordable Foreclosures Alternative Program, or HAFA for short. The HAFA program really changes the landscape and is a very positive step to helping all involved parties by mandating the removal of red tape and incenting parties to move forward with short sales. This program is mandatory for many banks, but it is important to realize that the banks need this as much as the distressed property owners, and most if not all banks are expected to participate at least to some point. Participants are required to have a substantially shortened approval time, in some cases as little as 10 days, which is a quantum improvement over what used to be. Indeed, in some cases banks will actually be able to provide pre-approvals, so buyers will know upfront if their offer is within the range of acceptability. These 2 points will directly result in 2 wonderful words: more buyers. Another big change is the release of liability for the borrower from the balance owed after a short sale. This means if you pay the bank less than you owe and they accept a short sale, you are off the hook for the remainder. The bank eats the difference. Again, the banks do this willingly because they still make out better than they would have in a foreclosure situation. Finally, the program provides incentives to junior lien holders, lenders, and borrowers in the form of cash. For instance, homeowners will get a $1,500 allowance for moving expenses. All of this goes active April 2010. But again, the banks want this to happen and are already gearing up for the program. The implications of this program are obvious. Short sales just got a lot easier and more productive. These sales will happen faster, and that means more buyers, and that means more transactions, and all that works out well for the borrowers and the lenders alike. The banks are now squarely on our side, working with distressed property realtors like myself and sellers like you to everyone's mutual advantage. The HAFA program is designed for homeowners only, but commercial property owners will still benefit. The methods and procedures put in place for HAFA will easily migrate to the commercial sector, so owners of distressed commercial property will also be able to take advantage of the shortened time frames, which will also lead to more buyers. The final implication here is more subtle but just as important. This is huge. It's a major shift in policy and a major new program for the federal government. And the government doesn't do this kind of thing unless the problem is huge. The translation is, you're not alone. There are literally millions and millions of honest, hard-working, distressed property owners out there, and there is no shame or guilt needed. This is business. This is the situation, and the government is providing a program to help. That's all. The takeaway points for today's webinar are, first and foremost, that short sales and deeds in lieu just got a lot easier. This program was put in place due to the demand for short sales, so you are definitely not alone if you are in this boat. You should not delay in getting advice from a certified distressed property expert realtor, as well as an accountant and attorney that are knowledgeable in this subsection of the real estate business. There is much more about this program that you need to know. For more information, you can head to remax.com, the U.S. Treasury Department, and contact the foreclosurepro.net for personalized service. The phone number is 732-648-9333. Thank you for watching this quarter's webinar. I'm David Silverman. Happy holidays.